Okay,
Thank you,
Kip.
Dale.
Kip, I see you. You're logged in twice. I don't know if that's going to affect sound quality or anything. I'm going to make you the presenter. I'm not sure if you want to show anything. Otherwise, I'll take the screen back and show your website. But great to have you back, Kip. Let's see. Oh, I'm showing you.
I unmuted him.
Okay, thank you, Steve. Hi, Kip. How are you?
Great, Dale. How are you doing, bud? What a great morning call so far. I really enjoy what I just heard there.
Oh, thanks so much. Yeah, we have a good time, and you know, our mission's to build up and edify traders every day. So, you know, that's just what we do. Do you have anything you want to show on the screen?
No, not at all. I just want to give you a compliment and give you a shout out because you and I first met a couple of years ago, maybe longer than that, probably through Twitter, if I remember correctly. And you're one of these rare guys and one of the really good guys that I know in the business that edifies others, builds others up, invites them on to their really competitors in a lot of cases onto your program. I know nobody else doing that. So big hat. Tip of that cap to you guys. I'll listen to you as often as I can and appreciate your great work.
Oh, wow. Thank you so much, Kip. And that's a great segue into your work, because last time you were on, there was, you know, always a debate. Longest bull market in history, due for a 10-20% correction. And I recall you were constructive, especially in bios, and you were correct. The market continued to go. Also want to tell the listeners, viewers, that you're not the typical newsletter guy that's just trying to beat the S&P. I don't know what you're trying to beat, but you're much more aggressive, loftier goals, and that you've accomplished it many years, a very high return. So you know how to pick good beta in stocks. Am I accurately describing you, Kip?
You know, probably that's about as close as anyone has gotten. My mentors taught me how to do what they do, and I'm just a good old Texas boy. I had two of the best mentors in the business, Michael Metz and Ted Parsons. Rest in peace, peace to both of these great gentlemen. I think we talked about them last time I was on. Yeah. And what they really taught me to do was to do combined fundamental and technical analysis. So I'm about 70% fundamental, 30% technical. I'm very aggressive. I use leveraged ETFs based on my investing system that I've built over the last 30 plus years. So I combine leveraged ETFs, timing the market, and then I also have the typically we never hold more than 12 stocks or holdings at a time. I combine the leveraged ETFs with growth stocks. Small cap growth stocks. So we typically hold about 4 or 5 of those. We have gold and silver mining stocks and then leveraged ETFs, but never more than 12 positions at a time.
Very concentrated.
Yeah, very concentrated, because I'm for the person that wants to crush the markets, and I make, you know, no bones about that. We've beat the S&P 500 14 of 15 years, up 2,300% net gains since beginning of 2014. And right now, getting crushed, just being candid with you, getting crushed in 2 positions in China and housing, which I'll be buying more of today, as a matter of fact. But other positions, we're killing it. We've got, you know, we're doing well. But it's been a tough market, been a very tough, very confusing market. I do not like the fact that we only have, 2 major global indices above the 200-day moving average. Yeah. That's very concerning. But October's gives us our best buying opportunities. So I think this is going to be one of those.
Okay, so then your tune, despite the fact that there's more of a two-way market, and you know, kind of like there was in January before we made new highs, and this two-way market actually, you know, I mean, that's what makes a market. I'd love to see 2850 to 70 in the S&Ps for short for one more break towards the Jan lows. I think that's a possibility, but after that, I think it's very important, you know, very probable that we get another blow-off wave to the upside. I'm kind of thinking, Kip, that it might be because Powell, who has been talking hawkishly again, that if we're near 2,500, 2,600 in the S&Ps, he won't be as brave. Do you think that has, I know that's not why the market goes up or down, but do you think that could be catalyst for the market to return to the upside?
I think it's what you just gave is matches my view almost identically. What Jay Powell has done is really set the markets up, I think, for a phenomenal rally into the first quarter of 2019. Rate hikes are probably just about done, and that'll be the surprise. That'll be the surprise to the upside.
Yeah, because all the dot plots are looking for multiple rate hikes next year, and the yield curve's on the verge of inverting all of this. So, yeah, I would say it's a very contrarian stance to say exactly what you just said, that the Fed is almost done or they will be done in December.
Yes, and what they're looking at is what I look at, which is employment, consumer sentiment, and the freight transportation index. Those three indicators, if you're looking at as a regular investor looking just for the best possible signs that you can find that the economy and the stock market, because of course they are connected, that both will continue to improve. We've got all three of those indexes still hitting new monthly highs after monthly high. The market does not reverse for up to a year until those three indexes begin to decline, which is, again, has not started to happen yet. So, when I got into business in 1985, the Dow Jones was at 1,200. I'm going to continue to take the approach that buying the dip is the appropriate course of action here.
Okay, I know that you were last time we talked, you were a big proponent of the biotechs, and they peaked, back right around the same time in June, and they're back at April support level. Do you have the same feeling here on biotechs, or is there a possibility, they almost look like the semis look very weak to me, that we could even take the IBB back down to this level? If you could see my screen, Kip, what do you think?
Yeah, I do see that, and I follow the XBI more than the IBB, but both look like death right now.
This is XBI, yeah.
I think that this market is not done going lower. Let's just call it like it is. The internals, which we follow very closely here, breadth, new highs, new lows, 52 highs, 52-week lows, just brutal. These are now worse than even the January 2016 numbers. So, again, I buy on pullbacks as a long-term investor, but I think we are probably headed lower in the short term. I'm with you. I would probably sell any big rallies we get here. As far as biotech, I'm more, when it comes to biotechs, we've gotten out of the biotechs with the exception of one position, and that's Cara Therapeutics, which is still up about 70% this year. And it's a stock that I think everyone can buy here. This is a $100 stock trading at 19 to 20 today.
Okay, you know what? I saw a great thing on Twitter, and it made me think. A lot of us, shorter term day traders, scalpers, and stuff, we all pat each other on the back. Great call, like if it S&P rallies to 28.5, and I'm right, I'm short. It takes out the Feb lows. But you know what? It's not about making great calls. It's about having great holds. HOLDS, because you can make a great call. The challenge is to be able to sit with the position through all the noise, and have that kind of patience. I think it takes more patience to hold a position than it does to wait to initiate a position. What do you think?
That's wisdom right there, and I didn't expect to hear that from you this morning, to tell you the truth, because I know you guys, you have a lot of traders here, a lot of short-term guys, and I love hearing that side of. That's not my style of investing, but I love hearing people that specialize in shorter-term trading. I am more of a long-term guy. I have one position I've held for 10 years.
Wow.
and it's still yet to really do what I believe it's going to do. But
it's almost like having a child, Kip.
And you do get attached, and I know that a lot of people say that's an investing mistake. You shouldn't fall in love with your investments, but I disagree. I believe if you find a great company with great management, why not fall in love with them? That's been and I think that's one of the reasons we've been able to beat the markets, is because we are, patient, long-term investors. The money's made in the waiting. That's our approach.
Okay, well, I'm looking forward to falling in love with the gold shares, but later on this year. And you talked about the golds. I don't know if you're trading individual issues or you're trading silver shares or the ETFs, but here's Nugget. And, we've had a recent decent rally in the gold. Actually, I think the metals are outperforming the shares. And I'm thinking, maybe gold has a little more left in it, but I'd love to see one more washout into the end of the year. And want to ask you this because you're a stock guy, is that, anyone who's held this all year, even though we've had a little bounce, they have losses. And now we're entering this time frame where people start to play tax games, Kip, where they're going to, do their tax selling to take their losses so that their gains don't look as good. Do you think that the golds might have one more washout left in them? And part of the pressure on those shares would be if anyone bought them anytime during the year, they're losing money.
Yeah, I'm a trend follower. So the 200-day moving average is pretty much everything to me. And until we get gold in GDX, which of course is the non-leveraged ETF for gold, until we get those back above the 200-day.
It's also more of the blue chips.
That's right.
These are the juniors. So yeah, there's a big difference between GDX, but the pattern looks pretty similar. I'll pull it up here. And 200 moving is going to be the signal for you.
That's right. And I want to see, I don't like to hold an investment that trades under the 200-day for more than 7 trading days. That's our signal. And the reverse is true as well. You got to stay above the 200-day for 7 trading days before we take a position. So, and that's, by the way, speaking of kind of more of a big picture macro point of view, that's another big tell, I believe, as to why we don't have any major global systemic issues. Gold has refused to catch a bid. And in my career, that's always been the telltale sign that we have some kind of big, some trouble brewing beneath the surface when gold begins to catch a bid. That just has not happened.
Yeah, Larry Williams used to say it's very unhealthy when the gold is going up with the stock market because it's like a patient having a temperature. The higher gold goes. So, like the market is sick. But so we talked about that the Fed might be done. That could be the catalyst. Maybe when the Fed is done, the dollar strength ends, and that could be the catalyst for a liftoff in commodities. So you think that's a potential scenario? And how do you like the way I interview myself?
You answer your questions excellently. I'll just say that. Mining stocks always lead the way, and we've not really seen that kind of divergence yet. So that's what I'm looking for. That break above the 200-day, and I'll get excited again.
Okay, so what Kip is saying is he'd like to see an example where the bullion is making new lows and the shares are not. That would be a very classic situation. Write it down because you might see something like that near the end of the year.
January fact, absolutely. I think this will be a group to own in probably early to mid-January.
How about the oils with everything that's happening?
Early to mid-December, I meant to say, yeah.
Okay, anything that you see in the oils and natural gas is looking okay. Any other commodity area, and are you staying away from any kind of bond?
I'm a big oil bull and was bearish over 100, turned bullish at 32. And so we've been acquiring 2 or 3 positions since then, used every pullback pretty much. Oil looks like it's headed well over $100 a barrel, and who knows why. I think right now the fundamental side of the story is flipped so much that the producers have not caught up yet, and it's really a supply-demand issue. But, for those that are aggressive, one of the positions we have right now, a 3-time leveraged ETF, is ERX. That's the 3-time leveraged ETF for energy stocks.
Let me pull it. Got it. Okay. Yeah, it could be setting something up here. So, crude peaked. We had a little bit of a 3-driver in the crude. So I'm wondering if you have any levels that you're looking at for crude itself. So, here's the picture.
Well, we do monthly dollar cost averaging. So I don't really have levels as much as when I've got a couple thousand subscribers all over the world. And, essentially, I can't. I was a broker for 15 years. I can't be a broker to 2,000 people that are subscribers to my newsletter. So,
Yeah.
so what I essentially tell everybody is, you all have different price points you paid for our positions. Essentially, what you want to do is every month pick a date, add to your favorite positions every month, and when we need to take profits, we will. And otherwise, you're buying every month.
Okay.
We typically hold the positions for about 2-3 years.
Yeah, so just take a picture of this. The next time you see a 1, 2, 3, you'll know correction is coming. That's one of my favorite formations. But I agree, and a lot of it is geo. I really do believe a lot of this is geo, and there's so many different pots bubbling on the stove right now, Kip, that any one of them could begin to overflow. And I think it. I think to get over 100, we'd have to see something happen in the Straits of Hormuz. If you're looking for that. So, all right. So, and that ETF, let me get back to that ETF because I'm going to buy some when I think the time is right, because I'm a professional guesser. Okay. And I'm going to try and guess the best area to get in. Let's look at the weekly on it. Yeah. I'm kind of thinking, Kip, that it's possible even, that maybe everything, even if we get a rally, and the S&P is back to 28.5 or so, that it seems like everything is kind of heavy. Maybe we just have everything going down into this time frame. While, sometimes when the dollar's good, nothing else is. And we have everything going down into the end of the year, December, something like that. And then all boats, different degrees, there might be different degrees of relative strength, but it seems like everything's heavy to me.
The market went up in the worst months of the year. When the market typically goes down, the markets went up. So it wouldn't surprise me at all to see the inverse of that take place in the year end. However, having said that, you've seen like a lot of us have, I'm sure, these midterm analytics. I mean, since 1946, we've had 18 midterms. We're up 100% of the time over the next year. So we got to get to November. According to this, we got to get to November the 6th. If we can survive till then, the average gain has been 15% since 1946 post midterms. Again, 100%. That's the kind of pattern that I think most people like to invest in.
Okay. Well, I would just keep this in mind in November, that the Bears feast on Thanksgiving and the Bulls do in Christmas. I'm just throwing a lot of this.
You need to write a book. These are all,
I'm like
Stock
Jimmy
Trader's Almanac. This is good stuff.
So I got it like Jimmy Durante, who you don't remember. I got 1 million of them.
Oh, yes, I do.
Okay. So what else? We've covered commodity sectors, very bullish. The oil sector, thinking the gold is going to be good. What are there any sectors you're avoiding?
The ones I don't own.
Okay, that's right.
We're out of the small caps. Again, the charts.
Oh my God.
On the small caps, and again, that's been a real surprise. But I'm more of a kind of a longer term macro guy, and the thing I keep coming back to when I look at these global charts, and they just look like death. I mean,
there's a Russell.
They've just been crushed all. And Russell looks like China. I mean, they're just crushed below the 200-day. But the macro point that I keep coming back to, and the one that's held up my entire career, has been that a strong U.S. economy equates to a strong global economy. And I believe what's playing out here is this reversion from globalism back to nationalism that's taking place all over the world. Everywhere you look, it's happening. And I think that's going to take time to sort that out. And I think the long-term result from this is going to be hyper bullish. And as the long-term targets, I think 40,000 by the end of Trump's first term is likely. Remember when Reagan got elected and it took him a couple of years to get tax reform through. But once he did, the Dow Jones doubled in less than 3 years. And that's right when I got into business. So I have that's fresh in my mind. So I believe the macro picture is hyper bullish.
Yeah. So, if we do get this shakeout, and it'd be classic, everyone's
Right,
going to panic under the Fed lows, right? And,
right.
by the world will be coming to an end, that we go to, those levels, maybe 2,300. And I'm not sure what 40,000 Dow equates to. Could it be like 4,000 S&P?
I'm an old school Dow Jones guy, but
Okay.
yeah, 3,900 S&P 500, sure.
Okay. All right. And so the groups that you're favoring now most likely would, that might be the time to load up on oil and gold and everything. Is, get ready to have your list ready, and when the rest of the world is panicking, should those lows be taken out, you start, wading into the market. So do you have a certain amount of cash that you recommend people have for an event like that?
Yeah, I always recommend you keep at least 20% cash. And right now, our VRA system has 7 of 12 screens that are bullish. That's the lowest reading we've had this year. So having a little more cash than that probably makes sense. But back to your previous point, my mentors taught me it's not a stock market; it's a market of stocks. So
Right.
that's really what we try to target is let's find our favorite positions, let's wait for them to get cheap, and then let's add to them.
Yeah, and so maybe we're entering an era, you were talking globally, of differentiation between
Yeah.
emerging markets and China and the US, and maybe their pressure is what's finally catching, putting low pressure on us, and that, we'll lead the way on the next big advance, and there'll probably be bear market rallies, that it's possible even within our own market that stock picking becomes even more important because of all the vicious sector rotation and the passive investing that's become so popular by just buying the spider, will not be the way to trade the market. That stock picking uh, will, and managers that can see that, which have been fighting a trend of people thinking, oh, all I have to do is buy, this ETF, could change. Think that could change?
I do, and but I've always thought that. I mean, I'm a big Peter
Yeah.
Lynch guy. What he averaged 28% a year for his career, the Fidelity Magellan, and that was always his approach. Invest in what you know, stay away from things you don't know, and then be a long-term investor. You make most of your money in your positions after you've held them for 3 to 5 years, and that just worked for me. That way, I can sleep easy at night. I'm not a day trader. It doesn't fit my trading mentality. But I think this whole there's going to be a day of reckoning for everyone moving to passive investing in these ETFs, and there's going to be probably what I would expect, and this could happen this month. It wouldn't surprise me at all if we had another one-day flash crash, something like that. And that's what's really happened 2 weeks ago with the 1,300-point loss in the Dow Jones. You saw the bids just disappear when all these trading systems got on the one side of the market. And that's my biggest short-term concern, and I think that's what we're seeing in the charts. We're probably going to get a one-day or two-day event like that that'll freak people out. It won't be a crash, but it'll be enough, as you said earlier, to get us below those January, February lows, and then maybe even back to the same levels of oversold we got to in 2016, which was, brutal.
Well, you know how if history is a past guide, you know, they didn't ring a bell up here in February, Kip, and look, it took 2 weeks. It's a weekly chart. So up, maybe down. Yeah, it's gonna, gravity. We have like an Isaac Newton market for a while. Why don't we wrap it with your highest conviction idea going into 2016?
Into 2019? Are we going back in time? I'm good with that. I would love to. That would be awesome.
You could go back 3 years and look at today's price. Yeah, no, 2019. Yeah, I turned the 9 upside down, Kip.
All right, I'll give you two. I'll give you a mid cap and I'll give you a small cap.
Okay.
And both of these, by the way, are up about 70% this year. We've had a pretty good year in this rough market. Cara Therapeutics, I mentioned earlier, symbol CARA, trading at about just under $20 a share today.
Okay.
Amazing biotech that almost nobody knows about, market cap less than $1 billion. And then my small cap is Patriot One Technologies, a Canadian company that should have, and the stock's up about 90% this year. Patriot
Wow.
One Technologies should have all of their weapons. They have weapons detection systems that are unobtrusive. Like, you don't know they're there. You don't walk through an X-ray machine. It works on cognitive microwave radar. And
Wow.
that's a Canadian company, Patriot One Technologies. U.S. symbol is Paul, Tom, Oscar, Tom, Frank, trading at about just under $2 a share right now. Those are my two ideas for the next 12 months.
Yeah, I think they had that on Star Trek. Huh? Didn't Spock have that, buddy?
Yes,
Oh,
they
no,
did. But yes, that's exactly how we get zoomed up. That's right.
Kip, what a pleasure talking to you, buddy. I hope you have a great fall trading season. Thank you so much for coming back. Lots of respect I have for Kip. If you have an interest in equities and you want to be aggressive, and I know everyone who's hearing our voice is aggressive because you all use leverage, check out Kip's website here. Right here, www.vrainsider.com, and you could follow him on Twitter at K Herriage. Thank you, buddy. I hope that dollars and pips rain down on you, and if I don't talk to you, finish this year like a warrior.
I follow you daily. You're one of the really good guys in the business. Proud to call you your friend. Thanks for having me on, Dale.
Yeah. All right. You're very welcome. Everyone, that's Kip Herriage. Follow him. This guy has conviction about what he does. And that's a wrap. I'll see if we have some Turnaround Tuesday trades for tomorrow. I'll do a little work and see everyone then. And remember, most of all, don't just count your pips, count your blessings. Enjoy the rest of your day. See all our members in member chat. Maybe I'll drop in, say hi. Adios, everyone. Thank you again, Kip. And that's a wrap. Goodbye, F.A.C.E.